Do you trust your central banks? Well, I'll tell you guys, right now might be a good time to question whether you trust the central banking system or not. The FDIC insures over $9 trillion of your deposits, my deposits, and the U.S. deposits as a banking entirety. But yet they only have over $126 billion of assets to be able to back that insured. Now, when Lehman Brothers collapsed back in 2008, one of the big things is the banking industry went into a frenzy. And anytime there's economic distress and anytime we're in a recessionary market, people question what they should do with their money. You remember the old saying of, I'm going to get my money, put it in an old coffee can, and then you go dig a hole in the backyard, bury it, and your money is safe. Or you open up a piece of drywall and you stuff it in a wall and you stick it behind the insulation, cover back up the wall, and your money's stuffed in some wall someplace, because that's like your insurance of having money for a rainy day. And so for most people sitting back and they have automobile insurance, one of the big things is you pay that insurance every single month, assuming that if there's something catastrophic that happens, like one of the hurricanes that hit Florida or Puerto Rico, or the hurricanes that hit South Texas, you just assume that because you've been paying out of good faith, that and you've been writing that check every month, that at the end of any disaster, you're going to get financial reimbursement for any type of financial distress you encumber based on your payment and that company being reputable. So one of the big things is understanding what you're putting your money into and what your liabilities are. Understanding that if you live in a coastal property and if there's something catastrophic, that insurance company may run out of money. But we never think about this from a banking standpoint. We never think about this if masses of people go to the bank tomorrow and they say, I want to get the $250,000 that I have in my bank account out right now today. And if even 1/3 of our population did that, the FDIC can't insure that money to give all those people back their cash. And so hence, it puts them in a very vulnerable position. So they're calling it a bail-in solution that the FDIC is looking for right now because they feel that they're in trouble. And so at the round table, they're sitting back thinking, how do we fix this? And are we in a very vulnerable position in 2023 with the way the banking industry is going right now, the way lending is going right now, high interest rates, inflation, and everything that's happening? And so is your money truly in a position to be able to be secured by the FDIC? Now, I always tell people, the worst place to put money is in the bank, ladies and gentlemen. The banks will lend on your money 9 times over what you deposit, and they're allowed to do so. But if you want your money and you want it out, and they're paying you petty pennies on the dollar, right? Not even 1% on the dollar is what the banks are paying you for having your money in their bank accounts. So I always tell people, real estate is king, ladies and gentlemen, and more so than real estate, assets, income producing assets that are cash flowing. With the FDIC going through what it's going through right now, they're talking about bail-ins to be able to help them bail out of the situation that they're in, over insuring money that they can't produce if every American goes in and tries to withdraw that money. And not only is it affecting us here, but there's foreign currency right now that's deposited in our U.S. banks. And ladies and gentlemen, that foreign currency can't be insured either. And so with their bail-in projections, right now they're talking about how do they fix this? Is it fixable? What do they do? And are they going to get bail-in money from our federal government to be able to help correct what the FDIC, the trouble that the FDIC is in right now? And so, ladies and gentlemen, I don't want to put my hard-earned capital into a bank that I don't know whether I'm going to ever see a return on that money tangibly ever again. So as you go out and you start generating capital, and as you go out, whether you're working a job, you're putting your money away in a bank account that you feel is going to seep you some interest and you're going to be able to take away long term, or whether you're just putting your bank account to have a secure place to put it, and if in lieu of a long-term investment, you may want to second guess exactly where that money is being placed and how you'll be able to ever get it out of that bank account. The best place to park your money is in assets, tangible assets like the one I'm standing in right now. Assets that are income producing that you can either lease or rent to somebody that you get a monthly return on your investment. Because ladies and gentlemen, cash flow truly is king especially in a market where if you can't even trust the FDIC and a government-backed agency that backs our central banking systems, then who can we trust to handle our money, our returns, and our investments? I like to say that I'll trust my real estate. And so, ladies and gentlemen, if you want to learn how to invest in multi-unit real estate, whether it's industrial warehouse, whether it's multifamily, whether it's storage units, whether it's retail or office, but you want to understand the most lucrative way to invest in that real estate, I'm going to drop a link at the end of this video that you can click so you can talk to me or my team about understanding how to position your money that you can leverage for cash flow long term in a secure asset-backed investment instead of an investment that's backed by the FDIC that's asking for governmental bail-in money to help bail them out of an insurance crisis that might affect not just you, but everybody, not just in the United States, but potentially worldwide. Ladies and gentlemen, if you love this content and you want more of it, give me a thumbs up, smash that like button, and subscribe to our YouTube channel, and I look forward to seeing you next time.